maybe you've been watching videos from guys who follow like very strict trading strategies, and you can't make that work for you. You cannot just stick to rules that you find online, or like just go in the market and trade this thing and like be consistent with it forever. Then discretionary trading could be the answer. And today I'll share with you a framework that works really well for some of my students to be able to trade with more flexibility and ultimately become more profitable and better traders overall after that. So let's dive right in. As if you listen to a lot of traders' advice, you'll hear people say just follow your plan, follow your rules, but that can only get you so far. There's a lot beyond that that we just cannot measure in terms of rules and like strict processes. And some people, based on their personalities, are much better discretionary traders. They're much better with more flexibility than without any flexibility, with very clear rules, and just kind of perform well with that. So they need some kind of aspect where they can take trades based on a bit of how they feel or a more flexible framework, which most people here don't talk about. So this is not something you can just go in the market and show up there and take trades you want because you feel like it. It's more like a framework that we prepare, still some structure around it, but a lot more adaptable and flexible to you as a trader. The first step into all of this is finding out what kind of type of trade you like to focus on. So do you prefer breakouts, do you prefer pullbacks, or reversals? These are the three types of trades you can look for in the market, and everyone should trade one of these. Now you start with one. Over time, you can increase it to more as you prefer. You could trade all three if you want to, but not from day one. Okay, don't do this from day one because you're going to be very confused. You miss out on some trades. You're going to be very overwhelmed. So in the beginning, it's only one kind of trade. Let's say you just do breakouts, or you just do pullbacks, or you just do reversal. And as you move and become better with that style, then you can add another one, okay? Or you can add different strategies over time. So pick one to begin with. Breakout is the most straightforward in my opinion. I like reversals better myself. Pullback is something I don't trade too much myself. I'm still familiar with it. It's still something that I understand very well, but not my favorite kind of trading because it's very low win rate. The reversals, if done right, are typically good win rate, like in the middle, 48 to 60% roughly, but they involve smaller reward to risk. So just keep the one you prefer, and breakout could also be very similar. Okay, then the next thing is to pick some pairs you like. So go in the market and try to find some pairs that you enjoy. So one thing I like to tell my students is they go through the charts very quickly. So this is what I would do personally myself if I were in that situation. So you go through your platform, then you kind of filter off with your broker. So I might be using NCAP, you could be using a different broker, up to you. That's all fine. And then you kind of look through the pairs that they have on that broker. And you kind of figure out which pairs you like and which pairs you don't like based on how you've been learning so far. So maybe you go through different pairs. Maybe you say, well, that's pretty good. Pick the time frame you want to trade. Let's say I want to do a daily chart just for this example here. And look at how this kind of behaves. So very nice, clear trends here. When you consolidate, it's quite clear too. We have the same lows. It's pretty good. This is a pair I would like to trade. It's USD. A very straightforward pair. We have some news events, so you got to be careful about that. But that's a pair I might want to trade. So cool. Now you find different pairs. Now it could be based on what you've seen in the past. It could be the pairs you like. I myself like a lot to use this Singapore dollar because it's a very clear pair. I like the moves on this. You can see it's very clear when we're trending. We don't have too much choppiness around this. Some consolidations, which I like a lot. Some trends. That's a pair to me that's quite clear. Okay, so that's a pair I would like to trade. Another pair I like a lot is Euro AUD. Also same principle because it's also very clear. We have nice consolidations back and forth. We have nice movement there, very clear kind of lows and highs. So good place. Actually, we have a trade set up here on the daily chart, which is something I have to enter after the video. But that's a nice pair I like to trade. So I'll pick, let's say it's three pairs. Euro AUD, GBP and USD Singapore dollar, for example. And you pick the one you like. And by the way, these are pairs to start with. They're not pairs you're going to trade your whole life. You could change it up over time. You could add some more to it. But in the beginning, pick 1 to 3 pairs you want to focus on. One pair would work really well if you day trade. 3 pairs is better if you swing trade to begin with. Now, you're going to want to go through these pairs and try to observe what makes it move. So if you picked, let's say in the first step, breakout, what makes it break out in this pair? What are some signs of a good breakout on these specific pairs? You're just going to scroll back to the chart and find different breakouts and look at these breakouts. Observe around the breakout. Are there any indicators that could have predicted that breakout? Are there any price action patterns that could have helped on that breakout? So you use your brain or things you see on the chart, things you've learned maybe in the past a little bit. Even if you are new to trading, you can still do this, by the way. You can still go through the chart, find a breakout, find what makes it work. So you might go back here and then you say, well, okay, this breakout, here's a breakout, but it didn't work. What makes it not work? Well, we have a big push. The RSI here, an example, was in the middle of the RSI range, so not very good for breakout typically. That could be one thing. We had a lot of wicks here. We had a breakout, then a bearish candlestick after, this could be a sign. Now you take note of this on paper. That's good. Something you can track over time. Then you might look at another breakout. So let's go back and see. Here we had a breakout of this high over here, and it worked out. Well, what makes it work? We had a big engulfing candle here. We had a push after that beyond, and that's kind of what happened. So you see that breakout, and then you say, well, we had a big push, big engulfing candle here. We had an indecision, but then we pushed beyond. Our RSI here was a little bit closer to being overbought. Interesting. These kinds of things, because you can kind of use different things. You might even look at different indicators, like the RSI, like the ATR if you want to. That could give you a clue. Now, my goal here is not to give you the answers, because I want you to train yourself to look for these patterns and become better in the process. I think it's just much more rewarding than if I'm just here to point the setup for you. Look at here when we broke out, we were near the top of the RSI. This is good. And then we kind of had these push, bullish, a little bearish after, and then these were all strong candlesticks. So you kind of train your mind that way to look at what works. And then you might see here we had a breakout of this range here below. And then we kind of broke out here. We had a retest of that range. We had a big engulfing candle. So interesting stuff here. So you kind of train yourself to look for what works and what doesn't work in the market. So this is going to take you a while, but once you're able to find these things properly in the chart and take note of them on a notebook, you'll find some patterns in between all the breakouts you've looked at. You'll find some commonalities there. And in those commonalities are going to be the next step that you use to actually make your process together. So what you'll do is you'll make a simple grid of all the good criteria you found for your trade to work out. So let's say a clear range for your breakout. Then it could be like a clear break of the breakout. It could be an engulfing candle. It could be a RSI being overbought, oversold. It could be having price not come back within the range. It could be a move straight to the top of the range with no big pullback. Could be no wicks at the bottom of the candlesticks breaking out. So all these things you find, like you put them on a list on one side, one column, and then the other side will be the points you give to those categories. So for example, a clear range could be mandatory. You cannot give points to that. You need that thing to trade properly. Then the next one, having a clear break of the range, also mandatory. Then the next ones could be only 1 point each. So if you have these things, it gives you a little bit more confidence in your trade. You decide what makes sense to you, what you need, what you don't need, and you give points to each of them based on their importance for your trade to work out. So the idea with that grid is that when you look at the market next time, when you take real trades, either demo or live, you go through that grid and you'll find how many points your trade has. And if it has a minimum number of points you decide, you can take it. If it doesn't have that minimum of points, you just skip it. You don't take it. So you can check these things. You have flexibility there. You could have one thing but not the other one. You could have the R side there, but not this other one thing there. You could have a clear break, but not necessarily a wick on the other side. So these things are kind of working out well. And you're designing your own process there, as opposed to following like very clear rules in the market all the time, the same thing. Next step is you can decide to either backtest this or not. I know a lot of people who are trading discretionary hate backtesting. They cannot go back and kind of use the rules because they feel the rules are based on discretion too much. But having this grid here is a good way to do backtest. And maybe you figure out that your rules, some of them don't work out long term very much. But some factors you've noted down work very well. So that's why the backtest is good. But you don't have to do it necessarily. You could also go demo in the market and then test your grid out in that market. So up to you to decide how you want to do it. I know backtesting works well for some, doesn't work well for some other people. It's your choice to decide if it works for you or not. But at least you're going to go back and track your performance. So have a way to every week, every month, look at the trades you've taken with your grid. You can even like write down on your grid for each trade if you want to. Then review those grids, review those trades, find out what worked, what didn't work out, what you could do better, and sort of improve your trading that way over time. So I have students go through that process multiple times. People get good results from it, especially when the personality is more on the discretionary side. They like more flexibility. Usually the people who are more creative are better at that kind of trading than people who are not creative, who are very like process focused. It's a different way to trade, not for everyone, of course. I want to make this clear. You can use that if you want to. If you have any questions on this or if you want some support, don't hesitate to hit me up. I'll leave my links below for social media so you can contact me directly there. And I'll be happy to connect, answer your questions, see how I can help, and of course help you progress and become better in the future. If you're not subscribed yet to the channel, make sure you're subscribed. We're just about to hit 100K here on YouTube, which will be awesome to hit it pretty soon. I'm preparing something special for when we hit the 100,000 subscribers here on YouTube, so it's going to be pretty fun to check out. Looking forward to see your reaction to this. And I'll catch you back here in the next video pretty soon. Ciao.